As of 4 p.m. EDT on October 7, 2025, with the market now closed, Nuburu Inc., trading under the ticker BURU, closed at a remarkable $0.475. This represents a staggering intraday surge of 86.27%, a move that has captured the attention of traders managing everything from a sophisticated Schwab Intelligent Portfolios account to those just starting their self-investing path on platforms like SoFi or Robinhood. On a day of astronomical volume exceeding 1 billion shares, the stock reached a high of nearly 50 cents. Now, a move of this magnitude in a microcap stock often screams speculation, a classic pump-and-dump scenario that many seasoned investors would advise steering clear of. The common expectation is that this is a fleeting, news-driven spike destined to collapse as quickly as it rose. However, the reality of what's happening at Nuburu is far more complex and strategically calculated than a simple speculative frenzy might suggest. The dramatic price action isn't just noise, it's a direct reaction to a fundamental and aggressive corporate transformation that aims to reposition the company entirely. The immediate catalyst for this explosive activity is the binding agreement announced by Nuburu's subsidiary, Nuburu Defense LLC, to acquire Orbit S.r.l, an Italian software company specializing in operational resilience. This isn't just another small acquisition. This is a deliberate pivot away from being solely a hardware-focused blue laser technology company into a vertically integrated defense technology provider with a significant software and SaaS component. The market is reacting not just to the news itself, but to the sheer audacity and potential of this strategic shift. Traders on platforms like Interactive Brokers are witnessing a company previously struggling with financial performance and NYSE compliance notices making a decisive move to enter a multi-billion-dollar market. The expectation was that Nuburu would continue to burn cash and struggle for relevance. The reality is that management is executing a high-stakes overhaul, and the market, for now, is rewarding that aggression. This surge is not an isolated event, but the culmination of a series of strategic moves over the past several months, including a $12 million public offering in September specifically to fund this defense tech transformation, the implementation of a dual CEO structure to drive the new strategy, and the elimination of all its long-term debt. This is a company in the midst of a complete metamorphosis, and the trading volume reflects a massive influx of interest from those betting on the success of this new direction. Let's break down the intraday action we witnessed. The stock opened at $0.328, already a significant gap up from the previous close of $0.255. From the opening bell, the buying pressure was relentless. The volume indicates that this wasn't just retail investors on the Robinhood app chasing momentum. The sheer number of shares changing hands suggests larger players are taking positions. The stock climbed steadily throughout the day, hitting a peak of $0.4994 before settling at $0.475. This wasn't a short-lived spike. It was a sustained upward trend throughout the trading session, which lends some credibility to the idea that there is genuine belief in the company's new strategy. This kind of sustained buying, particularly in a stock that has been beaten down for so long, suggests that institutional investors, perhaps those with a higher risk tolerance, are beginning to see value in Nuburu's new focus. While Fidelity ETFs and Fidelity mutual funds may not be piling in just yet, the groundwork is being laid for a potential re-rating of the stock if the company can successfully execute its plan. So, what exactly does Nuburu do, and why is this shift so significant? Originally, Nuburu was a pioneer in high-tower blue laser technology. This technology has significant advantages in materials processing, particularly for welding metals like copper and aluminum, which are crucial in industries like e-mobility and energy storage. The expectation was that Nuburu would ride the wave of electrification, supplying its advanced lasers to battery manufacturers and automotive companies. However, the reality was a tough road. The company faced significant financial headwinds, with negative gross profits and substantial operating losses, as shown in their financial statements. Revenue for the year ending December 31, 2023 was a mere $152,000, a dramatic drop from previous years, and the company was operating at a significant loss. This is the reality that had pushed the stock price down to its 52-week low of around 12 cents. The market had essentially written off the company's ability to succeed as a pure-play hardware provider in a competitive industrial market. This is where the pivot to defense becomes so critical. Instead of competing in a crowded industrial space, Nuburu is positioning itself as a defense and security company. The acquisition of Orbit provides a high-margin, recurring revenue software business that can be integrated with Nuburu's existing laser technology and the electronic warfare systems of another planned acquisition, Techne. This creates a powerful synergy, allowing them to offer a comprehensive suite of solutions for operational resilience, a market estimated to be worth between $2.9 and $3.6 billion in 2025 for US, EU, and NATO defense organizations, with projected annual growth of over 10%. The company is essentially building a defense tech hub, combining hardware and software to address mission-critical needs. This is a far more compelling narrative for investors than simply selling lasers. It's a move from a commoditizing market to a high-growth, high-margin sector with significant barriers to entry. This is a strategy that many institutional investors look for, a clear plan to capture a growing market. The SoFi Invest platform, with its focus on both active and passive investing, is a prime example of where an investor might begin to research a company undergoing such a significant transformation. Looking ahead, the future of Nuburu is a tale of two potential outcomes. The optimistic scenario, the one that the market is currently pricing in, is that the company successfully integrates its acquisitions and establishes itself as a key player in the defense technology space. Orbit's own revenue projections are ambitious, forecasting over $19 million by 2028. If Nuburu can achieve this and successfully leverage its blue laser technology in defense applications like directed energy weapons, the current stock price could be just the beginning of a significant upward trend. The company would have successfully transitioned from a struggling hardware manufacturer to a diversified defense contractor with a recurring revenue model. This is the reality that bulls are betting on. However, there are significant risks. The acquisition of Orbit is a related party transaction, as it is owned by Nuburu's own executive chairman and co-CEO, Alessandro Zamboni. While the company states that the deal was reviewed by an external advisor and approved by independent directors, this will undoubtedly be an area of scrutiny for investors. Furthermore, the company is still facing significant financial challenges. The recent capital raise provides some breathing room, but the company will need to demonstrate a clear path to profitability. The reality is that turnarounds of this nature are incredibly difficult to execute. The company will need to flawlessly integrate its new acquisitions, win major defense contracts, and manage its cash flow effectively. Any misstep could send the stock plummeting back to its previous lows. For those considering an investment, it's crucial to understand both the immense potential and the significant risks involved. This is not a stock for the faint of heart. It's a high-risk, high-reward play that requires careful monitoring. Comment below what you think is the biggest risk facing Nuburu in its transformation into a defense technology company. In summary, the dramatic surge in Nuburu's stock is not just a speculative blip. It is a direct response to a fundamental and aggressive strategic pivot. The market's expectation was for this company to fade into obscurity. The reality is a bold attempt at a complete corporate reinvention. By moving into the defense sector through strategic acquisitions, Nuburu is attempting to create a vertically integrated company with a much more compelling growth story. The recent price action and volume suggest that some investors are buying into this new narrative. However, the path ahead is fraught with challenges. The successful execution of this strategy is far from guaranteed. The contrast between the old, struggling hardware company and the potential new defense tech powerhouse is stark, and it is this tension that will define the future of Nuburu stock. Whether this is the beginning of a sustained recovery or simply a fleeting moment of optimism remains to be seen. But one thing is certain: Nuburu is no longer a company that can be ignored. The content shared here is for educational purposes only and should not be considered financial advice. Always consult with a qualified financial advisor before making any investment decisions. If you found this helpful, please like, comment, and share to support the community.